Hi guys, it's John Wildy. I'm here to talk to you a little bit today. After 9 years as a CRNA and 7 years as a full-time locum and running locumcrna.com, I am trying to give you some good information to help you out on your journey. All right, so I'm John Wildy with locumcrna.com, and I'm here today with Jeremy Stanley from Certified Financial Planning. He's the president and founder of CRNA Financial Planning. Active in the CRNA community. I actually met him while we were at the Washington, D.C. conference for CRNAs this last year and for advocacy. So very active in the CRNA community. He's actually written 2 books exclusively for CRNAs, The Wealthy CRNA and A CRNA's Life After Anesthesia, both of which have been used for CE credits in the past. And today we're going to talk a little bit about our 1099 and W-2 options for retirement planning. A lot of people ask me about how we put away different amounts of money within the 1099 space and how that's different from W-2. I understand there's some benefits of being able to put more money away in retirement. Can you tell me a little bit more about that?
Sure, Jonathan. We get calls and questions all the time talking about retirement. How do I save for retirement? What's the most effective way for a 1099 CRNA to do that? There's a lot of misinformation out there. You know, we find that other advisors, other folks who are giving advice to CRNAs really aren't telling them everything they need to know. You know, one of the questions we get is, you know, how do I maximize out my contribution? And, you know, a lot of CPAs really don't understand the new solo 401k plan. And we're still getting folks who say, my CPA told me to have a SEP, which a SEP is a simplified employee pension. A SEP, one of the things to understand about a SEP is that it's all employer contribution. I don't want to get down in the weeds too much. You know, my wife is a CRNA, and when I start getting in the weeds, her eyes start to glaze over. And, you know, it's kind of like when her friends come over, they're sipping a glass of wine, and they all start talking about this surgeon and what anesthetic they gave and what happened. So I don't want to get down in the weeds too much, but the SEP's been around for a long time. And it used to be, in the old days, SEP allowed for employee deferral as well as employer. Well, that changed, and most people don't have that plan anymore. There are some people who are grandfathered in and still do, but the majority of people don't. And that poses a limitation. It poses a limitation on the amount of money that you're able to get into the plan. And it also poses a limitation on your tax planning. And I know we're not going to talk a lot about that today, but I'll hit on that in just a few minutes. So basically, we'll talk about the SEP first. For 2018, the maximum amount that you can get into a SEP is $55,000, okay? That is if you're under age 50. If you're over age 50, you can do the catch-up provision as well, but we'll kind of go with that under age 50. Now, employee contributions are not allowed. Like I said, it's employer only. Why is that a problem? Because it is a problem. Well, a lot of our CRNAs come to us and they're either an LLC with an S-Corp election, or they're a straight S-Corp. And one of the reasons they do this is because they want to limit some of the self-employment taxes. Is that you following me, John?
Yeah, sorry, my husband also walked in for me, but yeah, totally. And the differences between the SEP and the 401k, the SEP also has some changes, right? Like, if you're behind in the year and you haven't put in by December 31st, that's where we might want to use a SEP, right? If we have gone into the next calendar year, but we haven't made up for those amounts that we can do in the previous year, right? Because the solo 401k has to be done in the same calendar year, right?
Well, you're partially correct, John.
Okay.
Basically, in the solo 401k, the employer portion, that $18,500 that you, the employee, can put in, has to be in by December 31st.
Okay.
Okay. The employer portion of that, which is basically a profit sharing, which is the exact same amount that we can defer into the SEP, 25% of whatever you make as salary that year. can be put in. So that 25% in the 401k doesn't have to be put in until tax filing deadline with extension, the same way as the SEP.
Okay.
So if you waited, it's the exact same, if that makes sense.
Yeah.
Got it in that year, you can also get your employer contribution along with the profit sharing portion. So
Okay.
yeah, so that's, and we get a lot of questions on that. You know, we have folks that just wait and don't get it in there, and they'll say, gosh, the only thing I can do is a SEP. Well, that's not exactly right. You might as well go ahead and do the 401k. It does have to be set up that year.
Okay.
And that might be where
That's where I ran into a problem. Yeah.
yeah, it has to be set up, but the funding can be exactly the same. If you don't get it set up, then your only option is the SEP. That's correct.
Okay. And you talked about 25. Is that 25% of the total taxable income, or is that part of your gross? So if I have a total gross 1099 of say 200,000, but my taxable income says 100,000, am I able to put 50,000 in or 25,000?
Okay, it's another good point, and that's why I was leading into, you know, a lot of CPAs and accountants recommend being an S corp. And the reason they do that is because you have to set a salary. And kind of use your example. Let's say you made gross $250,000 freelancing as a CRNA, but your salary that you only took $100,000 salary, and the rest you pulled out as distributions. And we see this a lot. And the sizzle behind that, the reason people want to do that is because distributions are not subjected to FICA tax, self-employment. Okay, so 15.3%, 7.65 from you, the employee, 7.65 from you, the employer. And of course, there's a cap on a portion of that, but again, that's a little more detailed we're going to get today. But that's the reason people want to do this S corp. So back to your question. Let's say you use that $100,000 salary number in your S corp. Then in the SEP, you can put up to 25%, but because you're single owner and self-employed, it's not actually 25%. It really works out to be about 22%, because there's a calculation you have to do.
Okay.
Okay. So in that scenario, let's just use 22. You got $22,000 now. Well, if you would have had the solo 401k, I'm assuming you're under age 50.
Correct.
Okay. All right. Good. I just want to make sure. Never want to offend anyone. So, so under age 50, you could have put in $18,500. John could have.
Mm-hmm.
Now, the company, because you took a salary of $100,000, can also do a profit sharing match of up to 25% of your salary.
Awesome.
So you could have actually gotten $43,500 in there on the 401k plan side, whereas with your SEP, you only got $22,000 in there.
Right. But that, so that's all part of the net number at the bottom line of your taxes, right?
It's actually whatever you took as a salary.
Salary. Okay.
That's what it's based on. It's based on your salary.
Now, okay, so if I'm a 1099, but I also do some W-2 and maybe they got a 401k, so how does that work out with maybe the solo 401k or the SEP? I know they're all kind of related for the IRS, so how's that work?
Yeah, so we run into this a lot. You know, we've got CRNAs that'll do a W-2 job, and I was just actually speaking to someone. She made this year so far, she made $120,000 working at the W-2 job. She's made $110,000 doing 1099. And she's going to max out the 18.5 in her 403B at the W-2 job. So at that point, that's the maximum as an employee you can defer. It doesn't matter if you do 9,000 at the hospital W-2 and you do 9,500 on your freelance side. The maximum you can defer is 18,500.
But then they would have the employer portion that they could still do, right?
Bingo.
Awesome.
So, yeah. So back to our example, under age 50, they can defer between the two up to a maximum of 55,000. So if they got 18.5 in the employee, you know, then they can put the additional in as the employer. But remember that profit sharing is based on how much they've made and taken as a salary in their S corp or however they're set up.
Okay.
So
Of course,
yeah,
it should be done in conjunction with the CFP and the accountant, so everybody's on the same page.
absolutely. Absolutely. I mean, everybody, you need a team approach in this, and you need folks that can understand how locum tenens works and so forth, and understand the industry. And unfortunately, there's a lot of misinformation out there, and we find it all the time. I mean, I'm not a CPA, nor do I want to be, but I know a lot of the same stuff.
Right.
And I'll argue with CPAs all over the country. I mean, I had a guy that was out in California making 400 and some $1,000s a year freelancing. And the CPA told him he needed a SEP, number one. Number two, he also told him that his reasonable compensation was $50,000 a year. And all I simply said was, hey, find me any CRNA that's going to go to Podunk, California, which is where he was, and they're going to work that for $50,000.
Right. You're going to end up in trouble, and someone's going to be looking at your taxes.
Absolutely.
So, of course, we should state that you're a certified financial planner. You're not necessarily these people, the Watchers certified financial planner. So it's not advice, but it is something to go off of. And if they chose to work with you, then you would be in a contract, and then, advice should be taken on a personal basis and not necessarily from this video.
Absolutely. Our attorneys are going to love you.
I know. Well, it's something that, everyone's financial position is different. And so
Absolutely.
advice is advice, but it should be taken under account with everyone's personal,
Absolutely.
history and taxes and everything else.
Yep, exactly.
So we talked a little bit about the timing of when we should set up a 401k versus a SEP IRA. Say I don't have any money to put in yet for this year. It's getting close. It's October now, and it's going into November and December really quickly. So if we're not quite there, or we need to make our quarterly payment and we don't know if we're going to have extra left over at the end of the year, is there something we should be doing now if we're just kind of venturing into this realm?
Well, I think the key goes back to making sure you've got everything set up. We think that for the majority of CRNAs, the solo 401k makes the most sense. If we've got someone who's working part-time and they're going to make X amount at the hospital and max out their 403b or 401k, and they never really aspire to do more than that, then the SEP probably makes sense for them. But the majority of our CRNAs, they're either working more 1099 or they're looking to go 100% 1099. In that scenario, more times than not, the solo 401k makes a lot more sense. So yes, I think first thing right now, here we are in October, it doesn't cost anything to set up a solo 401k.
I was just going to ask that, is there a difference in pricing versus one versus the other? And, how hard are they to set up?
Yeah, it's not hard at all. I mean, it's an application. I guess one of the big differences between the SEP and the solo 401k is you do need basically someone to do the administration. And, that's typically a third-party administrator. Depending on who you go with, it can be anywhere from $100 to $150 a year. Remember, these plans are government regulated. There is more regulation in a 401k than there is a SEP. You have to have a plan document. Somebody has to do that. It's the government, so they're updating that, continuously. Somebody has to do those updates. But that's what you're paying for, and that's a little bit different of a cost there. You're going to have that 100. I've seen it up to $200, depending on who you're going with, that's going to charge to do that per year. But I would say, making sure that, one, you're working with your accountant or CPA right now to say, all right, I've made this, through 3 quarters. We're heading into the final stretch. What should I be doing? What works best for my situation? I did a SEP last year, but I feel like I'm going to have more money left over at the end of the year. What does my tax situation look like? And starting to do that planning now instead of waiting to December. So I would say that would be one piece of advice that everyone could adhere to. And I want to go back for just a minute as well. So I think one of the other advantages to the 401k is the fact that you can also have a Roth provision. on the 401k. You know, and I think that's a strong reason, again, to make sure you got a 401k, because, you know, majority of our CRNAs make way too much money to contribute to a Roth IRA. You know, depending upon whether they're married or single, you know, it starts to phase out, you know, at 189,000 married, file, and join, and 135 single. So a lot of CRNAs are cut out of the fact that they're able to do that. You know, my viewpoint on this, and again, it's a personal opinion, is that we're in a pretty low tax environment right now. But I also look out into the world and see what's going on. We've got problems with Social Security. We've got problems with Medicare. The healthcare system has got problems. We've got this ballooning deficit out here. Eventually, John, during mine and your lifetime, somebody's going to have to deal with that.
Right.
And basically, you know, you look at that because people that are benefiting from these programs, they all vote. No one wants to cut back on these programs. So the spending isn't going to stop.
Right.
But they've eventually got to pay the piper. And we know that as sure as we're sitting here, that they're going to have to increase taxes.
Right.
It's coming. I don't know when. It's not going to be popular, but they're going to have to do it. So if we're in a pretty low tax environment now, we know that there are changes coming in the future. It's a good opportunity to look at the Roth provision. And because you can't contribute to the Roth IRA, another sizzle behind the 401k is that your 401k can have a pre-tax deferral, or it can have a Roth provision.
Okay.
Okay. So that back to you as an example, John, that $18,500 that you defer as the employee, we can make a decision and say, do we want that to be pre-tax? Well, if we do that, you know, what are the tax ramifications of that, and how does that work, and how does that look? Okay. Well, I like the fact that, you know, I'm paying less taxes, but I also want to keep an eye to the future and plan for that. Well, what happens if we made that $18,500 into a Roth contribution, which you can do? So you can actually defer $18,500 into the Roth. So now we go ahead and we pay the taxes today. We let that $18,500 grow 20, 25 years into retirement. That $18,500 is now worth $250,000, $300,000, whatever that number is, and it's never taxed again. So, you know, I'm a big advocate of making sure that you're building flexibility into the plan.
Well, and those are the Roth IRA allows for a little bit of provision too, right? So if we end up 10 years, well, my daughter's 2, so 15 years down the road, and she needs money for school, I can take out from the Roth, at least by today's code, I could take that money out and use it for her school, correct? Without the penalty?
Absolutely, you could. You can always take back out what you've put in at any point in time. Okay.
Just the growth amount that might be penalized or taxed, correct?
Right. So the growth amount, you have to establish the Roth and have it established for 5 years. Then you can take the growth out, or 59 and a half. Okay. So you've got to at least be 59 and a half or 5 years. So that's kind of the way you want to get it set up. So the younger you are, you set up your Roth, the better off you are.
Okay, awesome. Let's see. There is another question about potentially being able to avoid the taxes. Now, is that the Roth IRA portion that we were talking about? Or is there another way that we can maybe defer our taxes or maybe pay less in taxes? Is it based on what our taxable income rate is and those different tertiary levels of taxation for our tax code now, as far as I know?
Yeah, exactly. I mean, you know, obviously if we're able to put it in pre-tax, we're going to defer that income tax to a later date. But, you know, again, that's why we're big advocates of planning. You know, we won't accept folks that just come to us and say, hey, you know, we want you to do one piece of the plan. That's not the way we work. We really want to understand what John is trying to do for him, his family. You know, everybody gets up and goes to work for reasons. You know, right. If they didn't pay us, we wouldn't come to work, right? Right. But we want to really find out, you know, what is that reason? What are you working towards? And then because we only work with CRNAs, we understand that industry probably better than most people out there. And what are the opportunities available to you? And, in my situation, my wife being a CRNA, I have a vested interest to understand those opportunities. So that's kind of our approach is, how do we take this industry that you guys work in and make sure that it works best for you and your personal situation? And I think that's the key. And you hit the nail on the head earlier. Everybody's situation is going to be different. You and I's situation is going to be different. Your coworkers are going to be different. I love it when somebody calls and says, I had one of these calls today. One of my coworkers was telling me that they didn't ever want to do an S corp, and here's why, and it just doesn't work for them. Or, they told me that I shouldn't go freelancing because the market's getting ready to bust. And you just hear all these things. But everybody's situation is different.
Right, and we hear a lot of things, but then we try and go back to the people that actually know the information and try and tell them they're wrong. So, it's just like when somebody gets a Google doctorate and comes in and says, I want my anesthesia this way. Well, sometimes it works, and sometimes, it's better off that we're with a professional. So,
There you
well,
go.
thank you so much for talking to us today. I know we're still learning about the SEP IRA, the solo 401k, and some of those deferment options. I'm hoping that we can talk again sometime about some of our immediate or liquid possibilities, and if there are other like investments outside of the global stock market as a whole. So maybe some point in the future we can talk again about those options or other investments that can be done in the IRA realm.
Absolutely. I'd love to.
Awesome. I'm going to pause this here. Pretty cool. So this was John and CRNA Financial Planning with Jeremy. As always, please subscribe to the Locum CRNA YouTube channel if you liked us and want to hear more good information. Also, CRNA Financial Planning has a blog as well if you'd like to go see them. And they sometimes give us some good written content as well. Thank you very much to Jeremy and CRNA Financial Planning for today. And of course, Elizabeth for humming in the background. I hope everyone had a great day and learned something new today.